Okay, we've talked in the past about gap trading and how the highest high will be gapped up to the or form a gap to the lowest low, and how it gives you some signals as to where to buy or where to sell. And we've also talked about how large hedge funds have computer trading programs that basically read the movement of stocks and try to find patterns from which to go in and make purchases. The other thing that they will do is find these patterns and try to force seller or holders of stock to sell the stock so that they can gain opportunity to buy. If you think about it this way, and I'm going to show you this with Tesla. Let's assume there's a hedge fund that owns millions of shares of Tesla, and they have watched the trading of Tesla, and they know that if they can get it to move in a down direction for a certain percentage of the value, that they will initiate sales. And some of this is done because of people who put in stop loss orders and register them with the exchange. So the computer can actually go in and see where these orders are. And so it's feasible that they might literally, in times of low volume, sell some of their shares at discounted prices in order to initiate these stop losses and in order to scare people to say, I got to get out now. And so when they get them down to where they think the bottom is, and they will then start allowing the stock to go back up. Because again, you need to understand they're selling millions of shares every day. They sell on the second. So they're not looking like you and I for a 5 or a 10% gain. They'll do it for a penny gain. They'll do it for, a 10-cent gain because they trade in such volume. So you need to be aware of this or you'll get taken advantage of. And so what I did today, or the other day on the 16th, was watch Tesla on a minute by minute basis and then show you how literally they form the pattern that they want. They create the highest highs and they form a pendant and they take your money away from you. So let's look at this. This is Tesla. This is Tesla's trading on a minute by minute basis from June the 16th, and we're at Central Time 11:27. And you can see what I've done here is I went from its opening, which was its highest high for the day, and then I've drawn a line, a trend line connecting the highs. Okay, and it comes down here. Then it hit a low down here, and I've then connected the lowest lows. And as you can see, it's forming what is referred to as a pendant or a flag. And the theory is that as it approaches this point here of the convergence of highest highs and lowest lows, it will either turn and go up and then cover any gaps that may appear. It just traded outside the pendant. So charting theorist would say that has indicated that for the day now, Tesla will continue to go up. As you can see here, we did just create a gap from here to there, and we'll come back and visit it later today and see exactly what happened. Okay, so I hope that gives you an idea of the quality of your competition that you're dealing with if you get involved in short-term trading of stocks, as opposed to what I propose to do, is to just identify companies that are strong and are going to go up into the future. But if you want to play the short game, that's how it goes. So what I did then was wait for a couple of hours and go back and see what happened. And what you're going to see is their algorithm got to the point in that pendant and said, okay, we've taken them as low as we want to go. Let's now take our profits. And you'll see that they started moving the price up on the daily graph, and they started accumulating profits. And after we do that, we'll take a look at how the day ends. Okay, so I've come back now about 2 hours later to our chart. And what I had done is I had put some new gaps that I found over here. And as you can see, as we got to the end of the pendant, the Tesla turned and went up, crossed that gap there at 982, and then has subsequently crossed this gap at 990 and is now up at 994. So if we use our graphs on our morning chart, we can see exactly where the stock is going and how it's being maneuvered by algorithms and such to manipulate the stock. So now let's take and extend our lowest lows. And I think I'm going to move that a little this way. Well, let's see what we've got here. If we now chart our lowest lows, we have a graph trending up. And that's how, now what we would do is move our chart over and look for our next group of gaps. And here's definitely one here. And then there's let's park that. There's a series of gaps, one there, a sizable one right here, there, and this is where our chart is moving now. So if we follow the theory, the theory that algorithms, hedge funds, computer trading are moving the stock in the direction that they want to take it, we can pretty well see, at least in this instance, how it works. So this is how Tesla finished out today on June the 16th. And you can see it took a little bit of a roller coaster ride. Let me explain something a little further. When you see these large swings, these are a lot of shares trading. See this? And all through the morning, you can see a lot of shares traded until it got down here around 964. Interestingly enough, that's about a 4% drop from the high at about, what was it? About 1012. to the low. So if you had a stop loss order on Tesla at 3% or 4%, you got stopped out. And that's probably what these real big spikes are down here. These are people who are sitting with stop losses, and in fact, they started kicking in right in here. You can see there was just a series of 1, 2, 3, 4, 5, 6, 7, about 8 minutes when the bottom fell out of it. And that is happening because of computer stop losses in the system. And that's what the algorithm sees, recognizes, and takes advantage of. Literally, if the company that has the algorithm has a lot of stock, they'll start selling in order to create this drop. Okay? And then when they think they have exploited all the shares that are available, they jump right in here and start buying. And there you see 1, 2, 3, 4, 5, 6, 7, 8 buys that push it back up. And so the algorithm just came. Now the algorithm says, okay, we've made 963 up to 985. We made $20, $22 on this stock. Let's start selling it again and pushing these suckers down out of the market. And that's what they did. And then they move over here. Now notice how the spikes get very much smaller. And as we get into this area, they're extremely small, little dots that you can barely see. We've basically cleaned the clock of the retail traders. The algorithm is now just trading sideways, cleaning up the mess. Okay? That's what happens. And that's why when I say you want to sit down at the poker table with 9 of the best poker players in the world, they're going to take your money away from you. They're going to let you win, and then they're just going to initiate you like you've never been initiated before. So that's how the algorithms work. That's why I don't suggest, unless you are very astute in this, that you get involved in it. Now, I probably used a term that a lot of you are not familiar with, and that is a stop loss. I'll do a video on that later this week, but I wanted you to be aware that you can use gap buying and gap selling on a day-to-day basis or an intraday basis if you so choose to. If you choose to sit down at the poker table with a quantum computer and expect to walk away with anything. So as you can see, as the day ended, the volume went down dramatically, and that's why the extent of trading within the hour went down, and that's why the size of the trading bar is so much smaller, because the volume is all down. They've basically exhausted the fruits that are available on the tree, and they'll come back and do the same thing with Tesla the next day, or they may move on to another stock. In fact, when I say that, of course they will, because it's not a human being that's doing this. This is being done by a computer program that learns from your activity, the retail trade, and the other. Understand, they're competing with each other for the opportunities that they can create in the stock market. And let me again emphasize, I share this with you only not because I want you to get into that game, but only so that you understand the complexity of what the stock market has turned into and what artificial intelligence, because truly what's going to happen is once you write the algorithm, you then teach the algorithm to learn from its prior activities. And so it gets smarter and smarter and smarter. and to think that you can compete with it. Now, I know there are day traders who do phenomenal and make a lot of money, but you need to understand they study this on a regular basis. The other things that we're going to talk about is stop losses and how they can be in a dollar value or they can be in a percentage value, and how you have to be careful where you put those orders. Because again, the computer can go to the exchange and literally see how many shares are being bid at a certain price, and what the ask is at certain price, and how many shares are being in that ask category. So they can literally look down the price, and it's very similar to fishing. They bait you and they throw something out there and they come after you and take your money away from you. So that's day trading, but I think it best illustrates how the market works. The other thing I want to mention today is I started the first of this week a program where every morning I send out information on what I see in the market today. It's a very short email, but if you want to go to bestofusinvestors.com and register, I'll send it out to you. We're a tribe. We're trying to learn from each other, grow from each other, and protect each other. I really think you need to be aware of the sophisticated people you're dealing with when you're trying to trade in the stock market.